Morning, everybody. It is December 22nd, 8:25 a.m. Hope everybody's having a good morning. Let's get right into watch list. Okay, what do we got going here? We got crude's up 1.12%, up 88 cents per barrel. It's kind of coming off the highs right now. VIX is up 1%. Bitcoin's up 0.2. Bonds are being bought. All right, let's see here. The dollar's down a little bit. The Dow is down 0.23. Russell down 0.23. ES down 0.30. Nasdaq down 0.44, taking back the move from yesterday. All right, 10-year yield is down 0.65. All right, leaders laggards. Baba up 2.04%, followed by Netflix. Laggards, AMD. Okay, Snow, Nvidia. Okay, Micron had earnings and they just said they're going to lose money, basically. That's why you're seeing weakness there. Two leaders, oil stocks, no surprise there. Who we got here? Qualcomm, no surprise, right? Minus 0.95, almost down 1%. Roblox. All right. Sectors, energy, up a little bit, right? But we're probably semiconductors, no surprise there. The weakest at 0.75. All right, let's get into the daily chart yesterday. Okay. So what did we do yesterday? We gapped up, failed to fill the gap, almost did, and then pushed higher, right? And then where we found resistance at 50 moving average, right? It's pretty plain to see here. 50-day simple moving average broke this little downtrend we were in, and found also resistance here. This was the what is this, 1216? 1216's high. All right, so basically that was resistance, 1216 high and the 50-day moving average. Okay, Qs. All right, holding this trend line, we moved up. The Qs were weaker off the open. That filled the gap, but then pushed higher. That pushed higher to roughly the high of 1219. Okay, found resistance there. There's overhead supply there, which I'll show you. Okay, let's look at the triple head monster. Start with the 10-year yield. All right, so 10-year yield's been going up, staying in this range, right? A little bit of a hand showing here. If we go higher, the equity market should fall. Okay, broke this downtrend line. So we have to see where that goes. Now the VIX has gotten elevated a little bit because we're dropping off. It's not, hit a support here, so we have to see if this can push up higher. Okay, let's look at the dollar. Dollar's in a range. Still in a range. All right, hitting this trend line. Broke this trend. I don't put too much weight in there because that's more of a time break than an actual push up and break it under the 200 days. So we have to see. All right, that yen Bank of Japan thing really put a crux into everything. All right, let's go to the futures. All right. All right, so what do we have going on here today? All right. So prices here at the lows of the overnights. Let's get a better color. All right. So prices right here. Okay, we got a bunch of single prints here that were made from the push up higher yesterday. Those won't count to be cleaned until the 9:30 a.m. session starts. Okay, so we have the overnight high, RTHI. Okay, we just pushed down farther. Okay, just now. So another prominent POC from yesterday. Okay, which moved the most traded price of the week higher. And again, it's the most traded price of the yesterday and the most traded price of the week. There's just a lot of volume there. Okay, you can see it in the profile. Okay, So, all right, everybody was pretty much long above that. Well, you can see now, and even in the overnight, this is why you're getting such a move, right? You had a lot of volume up at the top here, hitting up here, and then you couldn't sustain it, and you come through the most traded price of the week and the most traded prices yesterday, and now we're coming to those single prints, and we might hit this demand zone. Okay, so in the futures, it's not a gap until you are above or below the high or the low. All right, I know in stocks some people say the close was here, which it was, and they'll consider this a gap down. Okay, but in futures you don't. Okay, so we're still in the range of yesterday, right? However, this is definitely not strength, right? Taking back, we held up here a lot of the day, and now we're taking that back. So this is kind of a line in the sand for the ES. Have some demand zones down here. Okay, we have a little gap down here. Have to see. I don't know. This is just at the low of the range right now. Okay, so pretty much. Let's see. This is 50%. Looking at 75% net short right now. Okay, could this be a little trap if we come into this demand zone, right? And then if we can get above here and make a push, right? We'll have to see though. We'll have to see. We'll have to see. All right, let's look at the NASDAQ. And oh, another thing I wanted to point out, the profile. So look at this profile, right? It's kind of have excess at the bottom, but since we moved the most traded price of the week higher, right? You see all this volume? We don't have any excess. So this would be considered a bullish imbalance in the profile, because you would expect the profile to more look like this. You would expect it to get some excess at the top. So we kind of have a weakish high here. So if we revisit this high, there's supply around this, but I'm saying if we revisit this high, it could get some excursion. That could be the fuel. Could be the fuel. All right. Let's look at the NASDAQ. All right, so most traded price in the NASDAQ also moved higher in the RTH. So that's why I have this purple kind of box here. And also, again, was the most traded price of yesterday, right here. Well, below that now, we're here. We actually just went down into this demand zone and popped out. Okay. Now, there's a supply zone that we hit yesterday that acted as resistance. Okay. All right. So I wanted to address something here. Hold on. Let me just make this bigger. And I don't know if there's a misunderstanding in my videos, but I did get a comment yesterday, and I want to clear some things up. All right. So I got a comment on my video saying that my levels is not why the market went up. Had nothing to do with the levels I had yesterday, even though I made a comment yesterday that the most traded price, see in the 24-hour chart, this is still the most traded price. So this was the most traded price and a prominent POC. Okay. Oh, wait a minute. That wasn't the. Let me just get this straight here. Where we came down to. This was where the most traded price was, right here. So say this area. That was the most traded price of the week at the time, and a prominent POC. Okay. And the overnight low, and I didn't even mention this, but the close, the settlement. Okay. Now I want to clear something up, and maybe there's a misunderstanding, because I got a comment saying levels didn't matter, and then I got told that this is the real reason the market moved. None of these levels that I put on my charts make the market do anything. The market makes the moves. I don't know what Apple's going to do, Microsoft's going to do. I have no clue. This is a macro structure that I'm looking at. This isn't granular. I don't know what the stocks are going to do when the market opens. I have no clue. Okay? I look for confluence, and my levels work. The levels don't make the market do anything. They just make me make a decision when they come, when it comes to my levels. It doesn't make the market move. Okay? But this is confluence. This is indisputable. You can tell me anything you want what you saw. You saw a crossover, you saw whatever method that you use is your method, right? However, I can't help in my market structure, which is a macro structure. This market profile is macro. It isn't about what happened off the open. These levels are here for a reason. So I had a level right here. It came right in there. That's indisputable. You can't debate my level. That made me want to make a decision. And that's why I said I like the level, how perfect the most traded price of the week, the most traded price, prominent POC. And then I also realized it was overnight low. And now I realize it was the close. That was the line in the sand yesterday. I said if we broke it, it was bearish. I said if we held it, it was bullish. That doesn't mean I know what's going to happen with the market when it hits it. I don't know what Apple's going to do. Okay? When it comes there, that's when you have to analyze what's going on in the market. And whatever you do to analyze that, great. You think I just look at it and I blindly buy it? I don't do that. I have to see what Apple's doing. I have to see what my internals are doing. I have to see which sectors are strong. I have to see if this move has weight to it. I don't just go, oh, it went in my level and I'm going to buy it because it went in my level. That wouldn't be very smart. So anything you see on my chart isn't magic. It's just a place that I'll be interested to do it. And I've said this before. Hey, if it comes here, you don't just blindly buy it. You have to analyze it, what's going on in the market. Then you make a decision. It ain't special. Okay? But it's not just, oh, most traded price of the week just means nothing. I mean, would I use something for the last 4 years if I thought it meant nothing? That doesn't make any sense. So, now let me explain this. And it's going to take away a little bit of the video just to make everybody understand. Okay? When you have a prominent POC, okay, and we had one yesterday too, this is how the market works. Now remember, this is macro. I'm not discussing why the market moves higher or lower. This is how the market works. This is a macro. This is a market auction theory. Okay? Using market profile and volume profile. This isn't debatable. This isn't about why we sold off or what stocks had negative news. It doesn't matter. This is market structure. Okay? In the NASDAQ, okay, what happened yesterday when we opened? See, it couldn't sustain the move higher. All right? And it came down to here. And that's what happens when you run out of steam and your profile's thin. Okay? Well, you're going to go back to the place that was the most business has happened the previous day. It's a magnet. It doesn't matter what you're looking at, demand zone being formed, whatever, trend lines when the market opens. It doesn't matter. This is a macro structure. This has nothing to do with granular stuff that's going on. Okay, what happens is if it can't find more buyers up here, it's going to go back and test the most traded price. This happens constantly. If you can't go higher, you come back to prior value. Okay, and came back to the most traded price of the week, the most traded price of the prior day, the overnight low, and the close. Okay, that's a lot of confluence. And I said, with all that confluence, let's say somebody just trades the overnight low, they go long. Let's just say that, hey, it went to the close of yesterday and they go long. Or, hey, that's the most traded price of yesterday. You know what happens is when people use these types of levels, that's targets. Most traded price of yesterday would be a target for a futures trader that faded, that shorted, that shorted even the overnight. They would have shorted it right there, took profit. So just be very clear. This is macro. When I look at stuff, it's macro. When the market opens, I have to be cognizant of what the market actually is doing if it goes to my level. All right? So I just want to make that clear. This isn't magic. It's not magic. I don't claim it to be magic. It just helps me make a decision. That's all it does. That's all it does. It helps me make a decision. I don't care why this went here. I've seen this movie 7 million times. It's not disputable. You don't have to agree with it or use it. So I want to make that clear. Crystal clear so everybody understands. And if you have a question, you can ask me. Because there's not just I paint a line here and I don't know why. Okay? There's a reason why it came right all to these areas. There's confluence here. It doesn't matter what happened off the open with trend lines and demand zones. It doesn't matter. That's your analysis. That's whoever's analysis. Everybody uses something different. I'm looking at the market just like everyone else. I'm not just blindly buying in the zone. All right? So, want to make that clear. If anybody has questions, put them in the comments. If you don't know why, I feel like that's important. And if you still don't understand it, fine. Or if you don't believe it, fine. You don't have to believe it. It's fine. It's just my analysis. So we have a weak high here. Now NASDAQ. Okay, I want to show you right here. That's weak now. Okay, that's a weak high. If we come back to it, could be the breakout point, right? But now we got to observe what just happened. Now with this prominent POC and most traded price of the week, now we're below it. Okay, we're below it. So that is bearish. Okay, that's bearish. Now we just had news come out too. Let's just look at what came out with the news because that's probably why that just went down. And yesterday's move higher was consumer confidence was better than expected, and it made the market go higher. So I think jobless claims. Let me see. It's jobless claims. I think there's something else. Let's see. Jobless claims. That's why. Okay, that's why the market's weak. Okay, GDP came out. I don't think the market actual 3.2, 4.4. The market's moving off this jobless claims. Okay, it's still the tight labor market's tight. Look, they forecasted 220. We got 216. That's this labor market. It's too tight. Okay, that's why this move is being exacerbated. All right, there's the reason. So, um, let's see here. Let's go over to, hold on a second. I'm going to go over to the hourly chart here. Let's see what I see there. Actually, I'm going to go straight to the market profile because I don't see anything of note other than we're taking back yesterday's move. Okay. Let's go right into here. So clearly we're taking back yesterday's move. Okay. And now we're in demand zones in both markets here. All right. So if this holds, it's going to be very easy here. You're going to have our range here. That's the weak highs. This could be making a weak low. There's also a little gap here. And we have demand zones here. So this could be, again, a little game before we get a rally where we're going to come down here. People are going to get nervous, and who knows, this might get bought up. But this basically is the day right now because of what I can see. Okay, so we're either going to push down here and pop back up and revisit here or go to the highs. Okay. Or we can, break this, fill the gap, and start making our way lower to about 38.62 and then 38.44 below that. Okay, that's the break lower. And then now we have a lot of work to do. Now there's single prints here in this overnight session, right? It's a little emotional selling here, a little bit of volume here. Okay, so we have to see if you get a reaction here out of these demand zones. And if we fill the gap, only fill the gap when the market opens. Okay, so again, if we're bullish, you got to think this is going to be hard to get through, but then we come up here, that's that weak high, we could push through here, and then we get a mini rally. All right, so same thing in the Nasdaq. You have the weak high 113.81, but you have a supply zone that's very strong up here. Okay, so you have the weak high here, and you're about maybe to make a weak low, but you have a demand zone. So again, if we're bullish, we're going to take this back, come up to here, try to break this. If we break it, yeah, we could go to the 9 EMA on the daily. All right. And again, if we come down here, now this is the most traded price of the 24-hour session too. So that will be hard to push above. All right. So that's this right here, this volume right here. You want to see the market definitely come above this, but if it can't, we could move down to 110.73 to the next demand zone. Okay, and then finally, this could be a range day, and just like that in the ES, I'll just take all this away, and it could literally be come down here, go all the way to the top, and we come back down, and you just fade the edges. could come down here, find buyers. Then all the overnights who were short, they get squeezed, come back up here, come back in and balance. That could very well happen. Okay? But you got some negative news with Micron. You got some negative news with the jobless claims. So, really have to see. Okay? Now, full disclosure, with the crude trade, I took it off yesterday for profit. Just to show you before I leave you guys. This is the most traded price of the week and the month right here. We got that move up, right? And we got it all the way up to here. However, the profile was getting thin. Okay? And I took it yesterday because I had a lot of time having trouble to break out of this. And I was like, I know crude usually has to go back down to then move higher. So this move is already selling off into this demand zone, right? So I knew that would probably happen. And when you're in a straddle like that, okay, you want big moves quick. This could now retrace a little bit back and we might balance off a little bit before we make the next move higher. So I'll be interested in a pullback, and I might make another option trade. I might do a different trade, maybe a ratio, or do something else to gives me a little more oomph for my dollar. Because I had that put dragging down the calls because I was playing the breakout. I got it, but it just didn't move like it moved good, but I want it farther excursion because we're pretty much overbought. We should probably make a swing low now. So that's that. All right. So that's it for me. Tomorrow's a short trading session. I don't know how much weight tomorrow. I might not even do a video tomorrow just because it's not going to be a high quality video. I mean, the volume should taper off starting probably even today. So, but again, if anybody has any questions about why I put something on, please comment. Ask me why. Ask me why. And if I'm misleading you somehow, ask me what I saw or whatever. So at least you can have a discussion, right? Everybody sees everything differently, and every method works different for everybody. So whatever works for you, right? Whatever works for me, works for me. So that's how trading should be. I'm always open. I've had a lot of mentors, a lot of different methods shown to me, and they've all worked. Every method that I've seen from somebody, I've seen it work. So I'm very open-minded like that. So everybody hopefully have a good rest of the day. Stay green, and I'm about to look at crude. So if I don't hear from you, everybody have a good holiday. All right.